Nvidia is one of the largest companies in the world, recognized for its cutting-edge semiconductor technology and leadership in AI-powered chip development. They have not only outpaced competitors, but continue to drive the industry forward through relentless innovation and groundbreaking technology. As a consequence, the stock price has gone up 1,400% in the past 5 years. Their financials have been amazing, with revenue going from $16 billion to $148 currently. Their profit has also grown massively from $4 billion to $66. Similarly, free cash flow has grown from $4 billion to $72 billion. Nvidia's best business segment are data centers, which accounts for 89% of their total revenue today. Data center revenues came up at $39 billion last quarter, which is up 10% for the quarter and 73% year over year, and has consistently been growing over the past 5 years. Nvidia also has an amazing balance sheet with $53 billion in cash and only 10 in debt. However, recent news that is negative for the company is that the Trump administration's export control on chips have forced Nvidia out of China's AI market, which has affected their margins and earnings per share. However, I believe this is short-term news, and I don't believe it affects the long-term fundamentals of the business. The biggest issue with Nvidia is the valuation. The company is now worth $3 trillion and is currently trading at a P of 46 and price to free cash flow of 49. Moreover, in order to take a deeper look at the valuation, I use my Google Sheet, which tells me at what price you should buy a stock based on the assumptions about the future of the company that you put in. I did a 7-year analysis with low, middle, and high assumptions. As you can see, the intrinsic value for Nvidia according to my discounted cash flow and net income model is between $48 and $333 per share. Moreover, this means that if my low assumptions occur, you're going to make a negative 7.5% annual return on your money, middle positive 8.75%, and high positive 24.75%. However, it is very difficult for my high assumptions to occur as I have the company growing 30% revenue annually for the next 7 years, averaging a free cash flow margin and profit margin of 50%, and I assigned a P/E and price to free cash flow of 30 at the end of the 7 years. In conclusion, I believe the company's fundamentals are amazing, but the company seems expensive. If you pay too much for an investment, your returns will suffer. It's unlikely that Nvidia will replicate the same level of growth in the next 5 years as it has in the past. And because of overvaluation, I believe Nvidia will not have great returns in the future. I hope you found this video valuable. Let me know what you think about Nvidia stock in the comments, and I'll see you in the next one.